Yo, what's good, everybody? It's your boy Algo again, and we are back at it with another Algo's Talk, aka Algo's Take, Algo Talk, whatever you want to call it. Either way, we're gonna get it in. I'm getting in to share my screen real quick, just so we can make sure life is all good. And what we're gonna be doing today is a little review. We're gonna go back in the time real quick. You guys know before everything, just want to send the invite to come snipe with us. You can join the Options Trading Academy by Instagram at Option Snipers, or go to www.optionsnipers.com. Also, make sure to holler at me on Twitter at Salute Sir. Right now, I do have 50% off on my Algo Talk one-on-one session. So feel free to holler at me at optionsnipers.com, click book a class, and it's Algo's All Things Trading. All right, so we're gonna fly through some things real quick. So we're going through our 10x in one play Friday. There's a couple keys to the gains. Price action, aka a method of day trading where traders make decisions about trades based on price movements rather than indicators. And this is all straight technical analysis when you're talking about price action. It's the one non-lagging indicator. Next up is retracement. Retracement refers to the temporary reversal of a trend. Now, it's short-lived, meaning that it usually doesn't retrace more than 50%, and it's followed by a continuation move, aka continuation pattern. And then lastly is measured moves. Price action tends to create certain candlestick and chart patterns. These patterns can be used to measure the potential for future price action. These three things were the key to our gains, and we're talking massive gains on Friday. Massive gains on Friday, like 10x on Friday. Some of our members took the whole pie. Some of our members took pieces of the pie. Either way, we were eating, and that's all we had to do. All right, so we're just gonna dive right in, okay? I'm gonna go to Thinkorswim. So first thing we got to chop down is the fact that everything comes from something, right? Like the SPX, as much as people want to say stuff is random here, there's really nothing random about the SPX. It's a series of measured moves, right? So just like everything in the markets, that's all it is. It's just a series of measured moves. And so if we can master the measured moves, essentially we have an edge on the price action. So you guys know I've been talking about a couple of things going into, hitting these all-time highs that we've been at. The first was this big triangle right here. Right, this huge triangle consolidation that we broke out of. And really there were two levels to it, I guess you could say, an initial and then an attempted breakout that failed. And then there's another move right here, which was the inverse head and shoulders, which really kind of cued us in that we might be getting real bully. I'm going to zoom in on that, but it's always good to be looking at your daily chart. Make sure you have, levels of, reversals and things like that. I like to plot levels on the daily and then also move in a little bit closer. So you guys got me on a blank SPX chart. So I am going to do some just raw dog levels just while we're here. So I went in on the daily. I'm gonna move that to the 4 hour and I'm gonna break down this inverse head and shoulders. No, let's move to the 1 hour. All right, let's break down this inverse head and shoulders right here. Okay, it was this pattern right here. So you guys will notice on this chart, if you look right here, you have shoulder, head, shoulder, right? And there's kind of two levels to this right here. And then, of course, this level right here. That's also in alignment with our triangle that we made on a bigger time frame. So we have a clear measure move right here from 4164 to 45 or sorry, 42.56. So one thing you can do is just calculate the difference between those two. What is that? About 90 points, right? And then how do you play an inverse head and shoulders? Well, you could project that 90 points to the upside. Where would that get us? 42.56, 43.56. Interesting how the price action that we're at as of today, Monday or Tuesday, it's right in alignment with this inverse head and shoulders. It's pretty much the profit target of it, with about 90 points. This is, about 100 points. That is very interesting that would happen. So that's what we call a measured move. At the time, we had some very aggressive profit targets that we knew could be hit. We had 43.20, which is where it opened up above. We had 43.40 as a level. That was around that 90 point mark, right? And then we reached highs this morning of 43. But we knew 90 points at least just from the 90 points in this inverse head and shoulders right here. So, I mean, it's amazing how measured moves can, manifest something like that. And I don't know why this isn't clearing, but either way, that's pretty awesome. And that's really what we played that day. Okay. Thank you. All right. So now let's go and talk through that day. Because once again, it's just really important to kind of understand how we were able to do what we did. I want you guys to be able to apply this for yourselves. So we're just going to move in on the 1 minute chart and just see how we played this. And remember, what we're talking today is three things: price action, retracement, and measured moves, aka chart patterns that you project upwards. When you're dealing at all-time highs, there really is no, you're kind of in the wild, wild west, if not for price action. And these principles about retracement. And so perspective is everything. Let's start there. When you have a gap up on the daily, right? So we'll see, SPX close 43.20 the day before, and then I gapped up to 43.26, right? So a 6-point gap up. And really, if you were calculating it, you could even say that move started from this green candle right here, right? Which is from 43.15. And perspective is everything. So we have to talk through this, right? And then, to open up at 43.26, that's almost 11 points, from the bullishness that ended the day before. So you move into the day, and on the first 1 minute candlestick, you get a mean gap up that gets you into 43.32. You want to mark that level. That's exactly what we did, because we knew, okay, we're above the 50. Let's wait and see what buyers do if they create a buy cycle, right? So we'll see right here. This was the buy cycle move, which was more than 3 green candles in a row that created or ignited a move. And you'll notice that on our algo, it did have the indication that this was the bullish move. So you always want to mark that level when you see a bullish confirmation move, because we want to play the continuation of that move, aka when that decides to break this level, which we had to wait for. So you'll notice that as the day went on, it was for the first hour and some change, it was straight up consolidation, straight consolidation. Now, a lot of people went on to play different tickers early in the day. I think, Tesla was doing some things, so there wasn't anything wrong with that. However, I always keep my eye on SPX because I know it can make me money. And so, throughout the day, I just had this bearish trend line. that I had at first had extended out right here. And then when it failed that level, I just kept redrawing it. It's all right to be creative when you're charting, right? So then when we got that low that time, drew it further out, kept failing it at the same level, which was really very bearish up until right about here. Okay, so as you'll notice, we had a ascending triangle here where we had a flat level of resistance, and I mean we had quite a bit of tops on this, and it did start to look very bearish just because tested once, twice, thrice, four, right? This time couldn't even get that high. This time couldn't get that high. 5, 6, right? So a 6 top, right? What made me, continue to keep my eyes on this? Well, it was this, the point of this right here. Higher low, higher low, higher low, higher low, right? As the day went on, it kept giving higher low signals. That is very bullish despite what the price action is doing. The next thing I want to point out real quick, and I'm going to show you guys the rest of this chart and, kind of show you guys how this printed. We're going to talk through retracement, right? So what I'm going to do for us real quick is I'm going to draw a Fibonacci on the igniting candle, which we decided was this green candle right here, up to the high right here. Okay. So what this does is tells you the percentage of retracement that happened. Okay. 50% would be right here. So when I talk through retracement, this is essentially what I mean is the team that's on offense giving back ground, right? It'd be different if this play went up to this level here and then retraced 50%, retraced more than 50%. Like the algos are trained to, feel the same emotions that you would and exploit them, right? So if something retraces more than 50%, you're scared, you're going to sell, right? If buyers can defend to make sure when they have lapses in liquidity or they got to take a breath or retracement happens, right? Where the overlying trend maintains, it just pulls back a little bit. So one of the rules of thumb that I use is the play pulling back into the previous level. So I'm going to get this off my chart real quick and just show y'all what I mean when I say that. So, okay, so this move right here, right? And then the next low was here, right? It didn't pull back and retake any of this space right here, right? Pulled up, and even when it pulled back, it didn't really retrace any of this space right here, right? Went up, pulled back, even when it pulled back, didn't retrace any of this space right here. So these are healthy legs up. These are what we call, healthy retracement. And, I know I tried to take this trade a couple times, got stopped out each time, but I you know what I mean? I didn't give up hope on it. And this is why, because of those higher highs and higher lows that it was making. I'm sorry. So we had a very clear measured move, and you'll see it right here. It's this triangle. So if you just took the base of this triangle, which was from this 43.26 to 43.34, what is that? 8 points. So draw 8 points up. What is that? 43.42. Yeah, about 43.41, 43.42-ish, something like that. Right? So you could have a profit target. Now I'll zoom us back out around here for that move, just because of the base of that triangle. So we took the base of that triangle. Now zoom us back in, and we just projected it upwards. That's all we did. Took the base of this right here, boom to boom, projected it upwards. That's the profit target we got. That's the profit target we hit. I like to sell into profit targets. So if you were in the Discord, you saw I took 100% on these right around here. just because, best practice. Also, I saw us moving back into the 36. When we're in the 36, that is, consolidation mode. So we'll see this move here. And then let's zoom in on this because this tells us again about retracement. So now we're going to just follow just the morning move, finally on the breakout of this triangle, hitting this 43.41 level. Okay, so you hit 43.41. So if we draw another Fibonacci retracement, I'm just going to show you guys this. So based on the breakout, which started right here. Okay, did it retrace more than 50%? No. Okay, what does that tell us? Bulls are defending the move. Okay, boom, you got an inverse head and shoulders type move right here. Okay, let's draw this out real quick for y'all. You know what I mean? I want to keep y'all plugged in with me here. Just follow me now. Okay, so inverse head and shoulders type move. We had your shoulder out, boom, head, boom, shoulder in. Okay, how many points is this? Let's check. Gonna clear that, get out my annotations, and let's just draw a simple level right here. Okay, 43.38, 43.41, 38, 39, 40, 41. Okay, so we can essentially say here that we had another at least 3 points on this move, 37 to 40. 38 to 40, right? So that would get us to, I'm sorry. Yeah, 38 to 40, which would get us to 42, which is this guy right here. And I even told the guys as this move was happening right here, I said, guys, we're in the wild, wild west right now. We're just going to ride the 36 and take profit on the way out. Now, what we play is called 0 day. 0 day contracts, especially if they go from out the money to in the money, are very, very, very lucrative. Another measured move that we had for potential on this, and I just remembered it, lied in our what is this guy called? It lied in our flagpole. I'm sorry. So we had don't forget, we had that inverse head and shoulders on that larger time frame level. And then we also had our flagpole, which 43.15 to the top of the flag, which is right here, which is 43.34, right? So that's 20 points. 34 plus 20 gets us 54. Right, which was this guy up here. Yeah, I almost forgot about the flagpole. Yeah, that was a huge part in the end of the day. And for those that were in the Discord, you remember I even called a lotto for the end of the day for y'all to take. Okay, so and look what it ended up hitting right there. Okay, do you think it's a coincidence that our flagpole, right, which was this zone right here, the flagpole up until this level, is the exact same amount that got produced up here at this level after the breakout? Like, guys, it's not a coincidence. Like, market makers love order. They love formations, right? It's all energy anyways. Every time somebody buys or sells, it's just an energetic transaction, right? So we follow the energy, follow the flow, follow the trend, you know what I mean? And there's clues in it. Okay, so then next up, we had another measured move here. Also, look at the amount of retracement, right? Boom, breakout move. Look at the retracement. Like, it is like completely non-existent. So here was kind of interesting. We had a bit of a cup and handle type formation happen. And this got called out at the end of the day on the Discord server. So when you guys trade with me, you see stuff like this with me, right? So we had our cup, we had our handle. So we were able to even project the cup, which was another 4 points, right? So 49, 50, 51, 52, 53, right? So we could project that upwards. And you could even give it a little bit more slack just because of that right there. And then, yeah, you had your break, which hit that profit target. So this play caused at least 10x. In the intro, you'll see a couple of the profits that some of the members took, but that's how you go at 10x. We got the contracts at 80 cents, and those contracts ended up being upwards of 1K per contract. So 80 cents, for those that don't know, is $80 per contract. And those, by the end of the day, were up over $1,000 per contract. And we took two different types of contracts that equaled, that generated 10x, and the other one generated 5x. But this is the kind of stuff that you'll end up seeing in our Discord. I am going to give you guys a sneak peek before I go. I was supposed to make this very quick, but as you can see, it did not go quick at all. But you see things like this in the Discord where throughout the day, throughout the morning, and this was that exact play, right? I'm calling things for us, right? This is when we first took the 4340s, right? Asking the buyers to hold. 5 minute needs to clear the 36, right? We have certain moving averages that we use. So I'm just I'm just showing you guys this real quick. I really shouldn't be doing that. All right. By later on in the day, those same contracts were 3.8, right? 200% gains. And then this thing just keeps on going. So that was the most awesome part about it, is that it was just like the gift that kept on giving. And we were able to call, some of these levels, directly, right? 80 when it was 2.4. And so, this is just what we do on the regular, right? Analysis on on all kind of levels. I do post a lot in here, but once again, the whole goal is to make sure that you guys can follow my trades along, right? This was the measured move from the inverse head and shoulders that moved up, right? It was kind of interesting how, yeah, it was just nuts. Lots of crazy games. I got to get out of here though, but I want you guys to just, once again, follow the follow the levels, right? Your price action will tell you everything you need to know. From there, watch the retracement. Are things pulling back more than 50%, or are they sustaining their gains? And then look for measured moves. Look for, triangles. Look up chart patterns, candlestick patterns. You want to really learn those. That way you can understand how to project measured moves. And those three things alone, guys, they'll help you win. They'll help you win in these markets. They're not as scary as they seem to be. You just got to know how the market makers play. All right. With that said, I'll be seeing you guys in the morning. Happy trading. And feel free to get at me in the comments. Don't forget to push that subscribe button.